Hi everyone, I'm Lorenzo Di Mattia, manager of Hedge Invest Billa Macro Fund. Let's discuss September first. It was a down month, marginally down about 70 basis points P&L. We were sort of negative, expected a correction, which actually happened. We were in fact net short, in particular the DAX, thinking that China would affect more the European indices, and it was the case initially. However, at some point during the month, we turned somewhat constructive because we saw the COVID trends, especially in countries where it was sort of somewhat concerning because like Israel and the UK, where a lot of people are vaccinated and cases and even deaths and hospitalizations seem to be picking up. But we noticed that actually this trend reversed in a pretty meaningful manner. And currently COVID is actually going away. It seems unbelievable, but from Israel to the UK to the US and Europe, COVID seems really to be declining, and what's most important is that the hospitalizations and deaths are declining versus cases. It was already much lower as a percentage of cases versus the last two waves, but it's declining further. In particular, the UK have a pretty high number of cases on a daily basis, 35 to 40K. However, deaths and hospitalizations are much lower than the previous two waves, and are also recently been declining as a percentage of cases. So this is pretty bullish, and so we decided to take positions in reopening trades, in particular aerospace, hotels, casinos, and all the hospitality sector, which we sold in April, expecting risks from another wave of COVID, which actually happened. Stocks like Boeing, Spirit, Expedia, so we bought these stocks. We shorted bonds, expecting pretty significantly higher bond yields. These all are trades that are working. In fact, in October we are already up more than 1%. There are four factors that matter at the moment for the market. The first is China slowing, following widespread regulation, inflation fears driven in particular by oil prices, supply chain issues due to, in large part, to COVID, and central bank tapering. We believe most of these fears will be resolved, and the pessimism about these issues have reached pretty high levels, not extreme levels, but pretty high levels, given we are in a bull market and the economy is still growing, as well as earnings. So the only risk that we see in the intermediate term is oil, which could actually spike quite a lot more. But with respect to China, prices are very depressed, and China is very likely to reveal a plan to prevent spreading of ever-granted default. Supply chain issues are likely to ease with COVID easing, because most of them are due to COVID, not all of them, but most of them are. And so in the fourth quarter, in particular in the first quarter, we expect them to ease. And the tapering by central banks, unless it's forced to be much faster next year, and also in terms of rising rates because of oil, what's going to happen in the next 2 months is already priced in, we believe, in large part at least. Gross stocks decline, Nasdaq decline 8.5% already. It could get to 10 or 11%, but we're close to being done in terms of pricing tapering. And so the only variable that we monitor, and by the way, we're long energy, it's the ultimate reopening trade. So we also have coals, we have oil and oil companies. So in case there is a super spike, we will make money on that part of the portfolio. But that's the only real risk that would accelerate inflation fears and rate hikes expectations that they would happen much earlier than expected. We shorted bond yields. We expect 170 and then 2% on a 10-year in the U.S. It could be more, but for now that's our target. Probably before year end, and we're short bonds in fact. And we started to accumulate selected precious metals like platinum and platinum stocks. We think that the bull market in precious metals will resume, starting from platinum and palladium, which have industrial use. So as long as it will be an inflationary environment with risk on, we expect this to outperform. And then once the risk on has run its course and we have more of a risk-off environment with inflation or deflation, or stagflation fears, then gold is likely to take off. And we do expect the gold eventually to make new highs, so past 2000 again, at some point next year. Thank you very much.